We've had big tech earnings, and we also have the Fed meeting conclusion today with the remarks from Jerome Powell coming out at 2:30. We need to talk about it. I am Dr. Stock, Doctor of Education, and if a banana and a cabbage had a race, who would win? Well, the banana would start off strong because it would peel out, but the cabbage is going to come out ahead. All right, so we heard already from Google, Microsoft, and AMD, and I want to give some commentary on their charts for that one, and then also I want to look at SPY, QQQ, and at the economic calendar today to talk about some of the catalysts that we have and provide some commentary there as well. So I'll also tell you later on this video where you can see my buys and sells, about my options course, and about how you can learn to do technical analysis to help benefit yourself in the market. So let me put up for you, the very first thing is the economic calendar. We'll get into that and then we'll get into the charts from there. So on the economic calendar, 8:15 today, we have ADP employment change. We're going to be watching for that, as that can be one of the first catalysts that we get, talking about private sector employment. And then also we have some more employment data that comes along with that as well. For employment cost and wages, it'd be nice to see those come down to ease more inflationary pressures. We also have a Treasury refunding announcement at 8:30. So for you TMF fans out there, that could be a catalyst for us. So we'll be watchful for that to see what direction that goes on us. And then moving down from there, 2 p.m. and 2:30, Fed interest rate decision, most likely going to stay between 5.25 and 5.5%. It is unexpected to see a cut at this time. The big thing is going to be 2:30. So either way, if you guys are day traders out there interested in watching that market, you might actually see some price action really take place somewhere, well, actually today because of tech earnings themselves, but because of the meeting, I would say that watching right around that 1 p.m. to 3 p.m., that's going to be a critical window for us to watch the markets, whether it's SPY that we're watching for the S&P 500 or watching QQQ for the NASDAQ 100. Those are my two favorite to watch for the markets. That is most definitely worth putting out there. IWM, by the way, for the Russell 2000 is also worth mentioning. That ETF, if we get good commentary about a sooner rate cut or a faster cutting process or anything like that, should we hear from that, that can be a very much strong upward catalyst, positive catalyst for the Russell 2000 stocks as well. So IWM would be looking for that one. So with that said, I do want to go from here and I want to put up the charts. We're going to look at SPY and QQQ first, and then I want to take a look at big tech and see what exactly is going on there. After we got the first three earnings announcements, I'll also toss in Tesla and Starbucks, because Tesla, even though they already reported earnings, we still want to see what's going on there. And then also Starbucks, I said yesterday in my video, I tossed that in as a bonus. We're going to see how that worked out as well. So first one, SPY, we're down about 0.4% in SPY in the pre-market hours. We'll see where that goes for us. Possible that we go a little bit softer, especially leading up to that tech meeting. So maybe a nice V-shape coming out of the markets today. We're going to have to see. Maybe it's a drop and then a drop. We're going to have to watch and see what's coming for us. And then moving on from there, I'm going to go over to QQQ. And for QQQ, we're actually down more like a full percent when we look at tracking the NASDAQ 100. And again, the Magnificent 7 stocks, those are going to be the most impactful for what we have for the NASDAQ 100, as they make up a significant overall market cap for the NASDAQ 100. And so they really got thumped by what we saw yesterday from the earnings from the companies. I should say the price action in the stocks based on those earnings. As I said in my previous videos leading up to this, and I talked about over my Discord that's available through my Patreon, I said we're most likely going to see a run up to those big tech earnings. They're highly anticipated, and we would need to see a surprise above and beyond the positive earnings that are already expected to come in. We got those positive earnings come in. They did not exceed and go above and beyond. I think CapEx was the name of the game there that really broke things down for us, especially where Google's concerned. So with that, we saw a sell coming into those earnings, or coming out of those earnings, I guess I should say. And then today leading to some red in the markets. And like I said, it's being compounded by the FOMC meeting also coming up, as we want to hear what Jerome Powell has to say for some further guidance on which way that market's going to go. So let me put this back up here. So again, QQQ tracking this one. If I zoom in a little bit more and then stretch this out for you, other way, there we go. So you can see where we were at yesterday when we closed up at about 425, and now today in the pre-market hours just below 421. So we had that significant drop. One of my short hedge positions actually work out pretty well for me today, given that softness that we see. And if we see continued softness on that one, that'll work out even better. So I did want to put that out there for the earnings as they came in and as I expected them to go. And this is one of those times that it comes in that I was right, that we saw a lot of run up in those prices, pricing in excellent earnings for the companies, and they were really good, but they just did not exceed that excellence that was already being expected. So when you look at Microsoft, they came off their peak a little bit. They peaked out at $413 per share. And then the pre-market hours down about 405. So down about 2% for what we have there. AMD really came off the peaks that it had. So for AMD, let me zoom in more so we can see where that peak was and see where they're performing at right now. So the peak was a few days ago, Thursday, January the 25th, the high price of almost 185, just shy of that. Today in the pre-market hours down at 162. So we're seeing a little bit of that course correcting, bringing us back into this bullish channel on AMD. So we had that sell coming off of that, and now we can further plan out where we see those movements going as a result of it. So moving on from AMD, we'll go to Google first, and then we'll go by Apple. So for Google, man, they got thumped pretty hard from this. So from 153 close yesterday down to 144, a significant drop for them in the after hours with their earnings. And it's the continued spend in CapEx. I think they had an $11 billion price tag in CapEx, and that's expected to grow throughout 2024. And I think that's going to be one of the things that hinders the big tech companies where AI is concerned on the software side of things, is finding the place for those companies within AI to find capitalizable positions or for efficiency, but then also for the filling out the top line, the revenues. So the efficiency would go into the bottom line, top line for those revenues. What is really going to be that huge revenue draw that they have? And right now that infrastructure spend is going to be big for a while. So with that said, we'll move on to Amazon. So for Amazon, their earnings are coming up on a Thursday in the after hours. We'll be watching for that. They are down to 155 in the pre-market, coming off of 159's close yesterday. So for that, we get another drop here for Amazon. Amazon Web Services, AWS, is one of those areas that probably also did pretty well. But like I said, we have a lot of positive and good earnings already priced into this, so they would need to exceed that excellence in order to overtake these peaks that we have up here. They might, when they report their earnings, they might go back and revisit them. I don't know that they exceed them. So we're going to have to be watching that one for Amazon. Let's go over to Apple quickly. There we are. And so for Apple, I believe they are also Thursday in the after hours. That's what we have here on TradingView. When we look at this, their price not wholly changed by this, but they're not necessarily leaders in that AI space. This is going to be more about iPhone sales, so the device sales that they have, and then also Apple services. We want to be watching for as services has been growing. We want to see continued growth in Apple services, and we want to see continued expansion there as well for the revenue and also the margin that it produces with the profits that result from it. Meta has their earnings Thursday again. So Thursday is going to be another huge day that we're watching for big tech. And for Meta, they were up over $400 per share. $400.06 is where they closed at yesterday. In the pre-market hours, down at $391. So we're going to be watching for that. Advertised spend could be enormous. Advertising spend from the advertisers. So that would be filling the pockets of Meta, at least filling out the top line for the revenue. We're going to be watching for that. But again, CapEx is where we're really looking, like how much is being spent on that investment into the AI spaces, looking for that next big thing that's really going to catalyze these companies. And Meta needs to stumble upon that as well, especially sometime really soon, like in this past quarter, in order to really see those rampant results come from this. So Meta, I think, has one of the biggest opportunities to capitalize on their earnings. So I'll be watching to see if we pop back up over that $400 per share, or if it's one that we continue to sell off a little bit and settle down a little bit. For the big tech, that what we're looking at least on the software side of things, not necessarily the infrastructure development side of things. And I know that Google has their own hardware. I know Amazon's producing their own hardware, but they're also consuming a lot of hardware in that, and it's taking a lot of CapEx in order to make that happen. Those are things that we want to keep our eyeballs on for those companies. NVIDIA doesn't have their earnings until closer to the end of the month. Now for them, they also came down off their highs at 627 is where they closed at yesterday, and then in the pre-market hours down at 617. I don't think they're going to be heavily penalized because I think a lot of that infrastructure spend is going directly to NVIDIA. I think it's going to be a really good quarter for them. It would be nice to see a drawdown closer to 600 or even back down into the fives prior to their earnings to allow us some room to the upside. Off of that, the higher we climb into the sixes, the harder it is to go bullish on the earnings that come out. So we're just going to have to watch for that. Expect there to be some sort of drawdown, maybe down to 600 itself. And NVIDIA, leading up to that point in time, leading up to those earnings, it will move with the market. So if the markets continue to rally, NVIDIA is probably going to continue to rally as well. If the markets go soft and they sell off a little bit, NVIDIA is probably going to sell off a little bit leading up to that earnings call. I think this is one area that we are going to see continued excellence. And like I said, at the tops that we are currently at, this is excellence being priced in, and we want to see some softening in that if we're going to have a nice bullish bounce off of earnings as well. So giving us another opportunity to capitalize on that bullish behavior for Nvidia. So Tesla had my stock price prediction and earnings projection through 2030. I'm going to be updating that based on their earnings. I have Nvidia's to update and put out today over at the Patreon, so be on the lookout for that if you are Patreon members. If you're not, that link is down in the description. For Tesla, 200 I think is that line in the sand. We made it up yesterday all the way up to 196, and then in the pre-market hours we're down to 187 today. And I think a lot of that, some of it's big tech, but I think the rest of it is that Fed interest rate decision. So we're going to be listening for commentary from Jerome Powell on that to see which direction Tesla is going to go. I think it's going to be a major catalyst for them moving forward from where they're at right now. If you guys want to see my Tesla stock price prediction, earnings projection, my Nvidia stock price prediction and earnings projection that I'll be updating today, you can check that out over at the Patreon. That link is down in the description. You can also see my buys and sells through the private Discord that I have over there. And you can talk to me and my community members as well. And then I also have an options course in the Patreon. Same place, same service. You just go in, sign up for the Patreon, click on collections, and you'll find the options course that I'm building out over there as well. If you guys want to learn about technical analysis like I do on my channel and like I do to benefit myself and my own portfolio, you can learn that using the link down in the description for the technical analysis trading course available through Stockmo Academy. Right now I have a coupon code TRADE for massive savings on that. I have a chapter over there in options, and then I also have some other features over there as well. And it is a very clean course that Mo has put together. And if you follow his bread recipe or if you follow his channel, you should most definitely check it out. He goes live nearly every day in the markets to show how you can benefit from that technical analysis in live trading sessions. And then there's also live teaching sessions within the Discord as well that's available over there. This is his own Discord, a separate Discord for the course itself, and it's a wonderful learning community. So let's jump back into the charts real quick, and then we'll wrap this thing up. So going back to Tesla here, I said before, 175 down to 167. 167, I believe, to be the line in the sand for any further drop that we might get from Tesla. And I think from there, things get very bullish for Tesla in an upward direction. I'm still a long-term investor in Tesla. Dollar cost averaging while we're floating down here below 200. 2024 could be a bit of a rough patch for us. And Elon has talked about that next part of the S-curve. So we'll be looking for commentary on that and progress on that with that next quarter that comes along. So we're going to be listening for it, especially for the next gen vehicles. We want updates on that through over time, and the more that is aggressively pursued to achieve that next part of the S-curve, the more positive it's going to be for Tesla. That's going to be an excellent catalyst. All right, Starbucks, I mentioned yesterday, we got a bit of a double bottom happening, and I said wouldn't be surprised if we had very positive earnings, and we actually popped up off this. For Starbucks, we went from about $94 per share yesterday at the close up to $97.50 in the pre-market hours. 100 is probably going to be that resist number that we look for. Right now, that 200-day moving average is at 98.85, so we might get some resistance there as well. We want to watch for a retest either of the 50-day that's down here and then pop back up, or we cross the 200-day, watch for the retest, and then take off in another bullish direction there for Starbucks. All right, let me bring that thing down. We'll wrap this thing up. So the markets today, possible push down that we see in the markets leading up to that Fed meeting, then it's anybody's guess there if Jerome talks in a way that sounds hawkish or that they're going to delay any sort of rate cuts and extends how long where you have that higher for longer. It's going to be downward pressure for the markets. If he seems to be sort of dovish and sort of hem-hawing around, that it could be that he's just trying not to give away the fact that March they're going to cut regardless, which could most definitely happen. That's something that we want to watch out for as well, because anything that would accelerate that rate cut coming from him, as long as it doesn't talk about recession, that would be something that could be upward pressure for the market. So we're going to be on the lookout for that. For big tech, Thursday is going to be that next big day that we have. Out of the three companies that we have reporting, so Meta, Amazon, and Apple, I got to say, Meta's probably my favorite choice out of the three. And then I would say Amazon's probably a close second with Amazon Web Services. And then Apple, I don't know. To me, it's the device demand that gives me that whole question mark right now. What does Apple see for this upcoming year for their devices? Do they see continued strength? Do they see more weakness? What do they have from their services coming up? Is that going to continue to grow aggressively? We're just going to have to watch and see and listen for that commentary coming from them. Apple is still something that can be rock solid and very stable compared to other stocks and other parts of the market. So that's something that even if they do have a bad time now, they're still a behemoth company for a reason, and they will find their way to innovate over time. So I think We'll see what happens with the prices. We possibly get a further drop from Apple, but I do think that they will find a bottom not too long afterwards, and that's going to create another investment opportunity for Apple in the bullish direction for things where you can fill out that long-term investment, or if you want to continue to dollar cost average over time. Remember, none of this is financial advice. All of this is just information, educational purposes only. And so I thank you guys for watching. I really do appreciate it. If you want to check out what I have for NVIDIA stock price prediction, earnings projection, and also my Tesla update that will also be coming soon to the Patreon, also my Discord with my buys and sells, that link down in the description. Go ahead and take advantage of it. If you want to learn to do technical analysis and learn to really benefit your portfolio in a positive way, really amplify your trading skills, that link is also down in the description for the technical analysis course. Remember the coupon code TRADE, TRADE, for massive savings on that. Thank you guys for watching. I really do appreciate it. As always, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.